So we have few buy sell confirmation here, and we are hoping that technically market moves back to retest this broken demand floor. You know, but we cannot force that to happen. But if price breaks above this blue descending trend line, it will go back to retest the structure. Most likely, it might retest this one or retest this one of them, and drop. But that dropping is under probability because when it breaks a supply roof, and it could turn it to a demand floor. It breaks a supply roof, it could turn it to a demand floor. Then your sell continuation will be a breakout from here, where you'll be looking at 3,227, 3,224. So you can see the structure from here. Price made is two supply roof one, supply roof two, supply roof three, supply roof four, sorry, supply roof one, supply roof two, break of structure, demand floor one, demand floor two, demand floor three, demand floor four, break of a demand floor. Now it's a supply roof. So on technical, we could be selling down from 30. So selling down from 30 has been something we saw in London section, and we'll be waiting to see if market breaks from that jinx. Yeah, it's something that have been happening based on that structure. A broken demand floor is now a supply roof. So a breakback of that structure will return price on demand. And if it does so, believe it or not, the market could just buy back. It could buy back, and you could be seeing things like this. Market buyback even up to this level. It's possible. So let's follow it on a step-by-step approach. That is why you have seen 3,000, 317, 316 holding price firmly. It's doing so because of this descending trend line acting as dynamic support. So we need to break out from that long-term dynamic support from June 16th. Markets are forming a dynamic support. We need to break out from it. If we break out from it, that's a sell confirmation. But for now, your your sell idea stops here until we break out from here, then we'll come down. So at the moment, we'll be looking at what price does with 3330, 3331, 3332. Break and close 1 hour candle above it is a bullish, it's a buy signal to just go up. And if you look at your expert advisors are also okay. Let's look at it so that because occasionally I also apply expert advisors to, you know, since I'm an independent trader, I need to look at it. So let's look at it on different time frame. You see that gold is bearish on all the time frames we're looking at. 1 hour, 2 hours, 3 hours is bearish, indicating a sell at this level. So there's a potential retest into 45. You can see the EMA at that level, which coincides with our structure, which we have. And if you extend it, you see that the structure is correct. So if you look at it again from the line chart, you see what price has done here. Here's a demand floor, here's a demand floor, break of a demand floor, indicating that a push into 45 is likely. A push into 45 will trigger a sell clause. And let's look at 4 hours to see what the expert advisor gave here a buy at 3,321. My sniper entry strategy using the descending trend line gave me 3,316, 3,317 buy, which I'm still holding. So let's see if market manages to break out from here. The 4 hours candle has shown a break of structure at this level, and this is trading. It can go any side. It can go both ways. It can go both ways. And for 4 hours candle to react here is also very much possible. If I realign this structure, if I realign it and I place my 4 hours close, my 4 hours close will still give me at this area, indicating that there is a potential sell at 40 something if market manages to get there. But at the moment, let's see what it does with the data it has on 1 hour. But do not forget that higher time frame, especially on intraday, 4 hours and 3 hours, hold a stronger bias than 1 hour. it gives a more trade clarity than a lower time frame.